Hello, friends. Today we're taking a look at NVIDIA Corporation, ticker symbol NVDA. We'll be looking at the stock performance in the past couple of years, current news, and the latest earnings report. Then we'll look at the fundamentals and the dividends, the history, and try to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to care about our money and find great companies at great prices. So, looking back at the past day chart, Friday, NVIDIA went down almost 8%. And I know that because I own this company, so I have stocks on NVIDIA. So, take that with a grain of salt. In the last 5 days, it's been up 4%. In the last month, it's up 24%, which is amazing. Year to date, it's up 77%. Last year, 262. And in the last 5 years, an amazing 2,053%. That is great. NVIDIA had their earnings report on February 21st. The latest analyst target price for the next year is $800, but I don't think that has been updated. I do believe that analysts think that this is a strong buy. And they do pay a dividend of 16 cents, which is almost nothing. And the ex dividend is going to be on March 5th. So right now they have close to $12 in EPS, and they're trading at 73 PE, 73 times earnings per share. But look at this, forward PE is at 38 in the forward PE, and that's part of the reason why NVIDIA has had such a great run, is because they continue to have great numbers, but also they continue to the projections that they have is just really, really amazing. Let's jump right into Seeking Alpha and looking at the latest quarter. The latest quarter, they beat EPS by 53 cents on normalized and 70 cents on GAAP. Revenue, they beat by 1.5 billions just for the quarter. They made their revenue was $22 billion. Now, in order to kind of think about all of this, let me just jump right here. Last year, is it this? Let's see. Yes, 2023, they made 27 billions. So just in one quarter, they did what they did. They made in revenues same that last year's total year. So they're growing in really amazing ways. They are expected to beat that again next quarter, which will be reported on May 25th. They are analysts are thinking that those things are going to continue to grow. Revenue will be 24%, and in the last 90 days, they have had 40 upwards revision. When it comes to estimates for the quarters, as you can see, they continue to grow year over year of 400%, over year of 115, year over year of their 58. This is quarter over quarter. But if we went to see what they're estimating for revenue next year, they're estimating to almost double the revenue, and then after that, the year after that, probably go like another 25% up. When it comes to EPS, they're also looking to go from 12.96 all the way to 24 29.60, and then 29.32. Those are the estimates for the next couple of years. So just this year they're expecting to double, and that's part of the reason why on EPS and um, class revenue, cash flow, I mean, all metrics are expected to double. So that is one of the reasons why this company is just on a tear going up. So we're going to be jumping into looking at the past 10-year fundamentals. But if you like what I'm sharing with you, if you have any questions, any comments, please put them down there. I encourage you to subscribe to our channel. Thank you for all of those that have subscribed already. Leave a like. It really will help the channel. I'm trying to get to the magical 1,000 subscribers so that maybe I can qualify to get paid with some of the what's it called, advertisement that they put in. So as you can see, NVIDIA was growing pretty nice. And one of the things that happened to NVIDIA, for those that don't know what NVIDIA does, they make chips, and they do really high quality chips. And they used to have almost 40% of all their revenues coming from gaming. And then now their chips are very looked after for data centers and for all this AI technology that is coming up. So as you can see, it has been growing really nice. And in the last year, with all the advances of AI, their revenue has grown, and the interest on their chips have gone up. There is a little bit of risk when it comes to China and United States fight about the chips, but I will encourage you, if you are going to invest on NVIDIA, do your own due diligence and do your own research for that. We're just gonna go through, look at the past. In the past 10 years, revenue has grown at 30% CAGR, and on the last 5 years at 40%. Their gross margins is 62, which I normally like to see them above 60. So this is great because it means that they have a lot of powering, a lot of pricing powers, because they're using less than 40% of cost. It costs them only 40% on their products. When it comes to earnings, once again, it's been growing crazy. So in the last 10 years, because of this big jump, then the numbers are a little skew. So last 10 years, 45%, and last 5 years, 60%. So whenever you're analyzing this, I will encourage you to be a little bit careful of what your expectations of growth are going to be for the next 5 years. The profit margins are at 26%, which is pretty nice. When it comes to free cash flow, once again, the same thing. This growth rates are inflated because of the big jump on 2023. So we're looking at above 40% growth on the last 10 years and above 44% in the last 5 years. Free cash flow margins are at 30%, which is really, really nice. And that's the average in the last 5 years of free cash flow margins. And the free cash flow yield is low at 1.4, and that has to do with how the price of the stock has grown so fast. When it comes to book value per share, it has been growing 28%, above 28% in the last 5 years, and above 24% in the last 10 years. The average of the last 5 years return on invested capital, an equity is 29%, which is amazing. Return on asset is 18. Same thing with return on invested capital. Dividend has been flat since 2019, but if you're paying above almost $900 for a stock, and you're only getting 16 cents on dividend per year, yeah, probably that is not something that you worry too much about. So payout ratio is less than 1.5%. So it's great. They have grown their debt almost 20%, but part of that is just all the expansions that they're doing, and I don't worry about it because they can pay for their long-term debt with less than 1 year average of their free cash flow. Shares have gone up, and they have maintained since 2018 close to the 2.5 billion million, yeah, 2.5 billion shares. So it's been relatively flat. When we put all the numbers together, this is an amazing company. And this is something that I was going back and forth because, yes, just giving you a little bit heads up, it probably it is overvalued. But the thing is, the growth that it shows and all this stuff, it might be a good reason to buy. That's part of the reason why I bought, is because the numbers are really, really amazing. And you may disagree with me, so I wouldn't consider NVIDIA a value play. For me, it's more a growth play, and probably a short-term growth play that I need to be paying attention closely. So we're going to be jumping into some of the valuations. I want to remind you that I'm not a financial advisor, and I'm just a YouTuber, and all of this is for educational purposes and just for entertaining purposes, and you should do your own due diligence. Okay. So with that said, let's jump to the historical multiple valuation. This is whenever we take the different ratios that the company has, and we're gonna multiply them by the multiples and try to figure out what the market has normally pay for it. And the problem with this valuation with NVIDIA is that the last 2 years, especially the last year, it has been way too over the top. So whenever you have all these 4 years of low PE or low revenue or low free cash flow, and then suddenly you have a big one, that's going to skew everything. So I am not going to be using the historical multiple valuation, but just if you want to know, if I had to choose, I will probably be looking at the trailing 12 month, and that would be a $500. Heck, if you can buy NVIDIA at $500, I will buy it. When it comes to revenue-based valuation, this is looking just growing the revenue at their historical growth, and then using historical profit margins and using a 60 PE, then and using the historical growth of the last 5 years of their growth or buyback of their shares and their revenue or the dividend. Whenever we put all the numbers together, we're looking at a fair value today of $1,054. That's without any margin of safety. Whenever we look at the discounted earning valuation, growing the earnings at 25%, which I think is fair, with a 60 PE. I still think that in the next 5 years, 60 PE could be reasonable for NVIDIA because they're just, all of these AI things are just starting. So if we look at the trailing 12 months EPS, that will be giving us a $1,092 as a fair value. Looking at the payback time, growing the free cash flow at 25%, trailing 12 months for the next 8 years. If we were to assume that we will receive all of that money, we will be receiving $565. Discounted free cash flow valuation on only 5 years. We grow it also 25%, and we're looking at a trailing 12 months of uh, $1,217 fair value. When we look at the owner's earnings valuation, it gives us a fair value trailing 12 months of 237, but that is using a PE of 20. Every time that you look, so that you know, every time that you look at the owner's earnings valuation, and maybe I should change this. It's a 10 cap, so I normally multiply by 20. So those are the numbers that you see here. But if we were to use a PE of 60 and just using the earnings per share valuation that Warren Buffett described in one of his letters, then we will be looking at a trailing 12 months of $712. When we put everything together, I am ignoring the multiple valuation. We're looking, and I'm just going to leave it there for you to see it. The average right now is 664. I will be mostly looking at the trailing 12 months. It gives me a fair value of 833. However, if we make the changes of the owner's valuation, so if we were to use the 60 PE for this earnings valuation, now the average is $732, and the trailing 12 months is 828 as a fair value. If you wanted to take, if you wanted to take 10%, that's $835 entry, which will be close to where it's sitting after hours. I bought it. What did I bought it at? I think I bought it at 810, something like that, and I'm okay with that. If you wanted a 15% margin of safety, that would be at 788, which it wasn't. It was there probably a week ago. Yeah. On February 28th, it was somewhere around there. So it could be that it's a good time to buy NVIDIA as it continues to pull back. If it pulls back, I would love to hear your comments and what you agree or disagree with me. I would love to hear your point of view. If you want to get this valuation sheet, you can get it at Buy Me a Coffee. There you can support the channel too by leaving a little donation there. But the best way that you can support this channel is by subscribing, leaving a comment, sharing with your friends, and most importantly, let me know what you think. I love the conversations that we're having in these comments. Just take the time to let us know. Do you own NVIDIA? What was your entry price? Are you looking to buy it? Are you looking to sell it? What do you think the top is going to be? Some people are talking about the possibility that this run is about to pop, but also I read an article about how there's a possibility that it will pass the 1,000. I do believe that it's going to pass the $1,000 per share. So thank you for joining us, and I'll see you next week.